What's going on, guys? I hope all is well. My name is Rico. I appreciate you guys checking out this video. Hit that like button and subscribe to the channel. I wanted to talk about the Federal Reserve and the raising of interest rates. Right now, the Federal Reserve is in the midst of raising interest rates, and they've been raising interest rates for almost a year now in order to combat inflation. And the reason for this is because they are trying to slow down the economy, because credit is a major thing in the economy. And when the interest rates were very low, people borrow money. And when they borrow money, obviously they go out and spend money. And that's a big factor in the reason why we have inflation. The other factor was all the stimulus that we had during the pandemic. That helped to create inflation. So during the pandemic, interest rates were lowered in order to be able to boost the economy, so the economy wouldn't fall flat during the pandemic. And when that happened, obviously interest rates were very low. The Federal Reserve lowered interest rates, and that caused people to want to borrow money to be able to spend. But over the past year, the Federal Reserve have been raising interest rates, and they do this in order to be able to slow down the economy. I want to discuss how the rising or the raising of interest rates impacts you, because it's very important to know that, because the raising of interest rates impacts the consumer, it impacts business, and it impacts the overall economy, because it's slowing down the economy, because credit is like the lifeline of the economy. And when interest rates rise up, things slow down. People stop spending money. People want to borrow less because interest rates are higher. So it's very important to know the outcome of that and how it impacts you. And one way it impacts the consumer is credit cards, because when the Federal Reserve is raising interest rates, then since credit cards have variable rates, the rates of credit cards rise up, making it more expensive to borrow money. Also, if you already have a credit card and you owe money, and you have a balance on your credit card, then you'll notice that your interest will be bigger, or just a big overall bigger amount, because of your interest rates rising up. So if you have a small balance, then you may not notice a big difference. But if you, for example, have a bigger balance, then you will notice a difference, and you probably have noticed a difference over the past year if you've held a big balance on your credit card, because the interest rates have risen up substantially over the past year. And it's important to know that if your credit card interest has kind of got out of hand, you do have options. One option that I would say that you can research is maybe doing a balance transfer, because there are plenty of companies that offer balance transfer offers, maybe for like 0%, no interest for a certain time frame, to where you could be able to use that offer to be able to pay off on that high interest balance and be able to transfer that balance over to the institution and enjoy 0% for an extended time frame, in order to be able to just avoid interest and be able to breathe and be able to hopefully pay it down to avoid all that interest. So that's one way, or one option that you have if these rising interest rates have impacted you. Another aspect where interest rates have impacted individuals is car loans. Car loans are more expensive, and also business loans are more expensive. So anywhere where you have to borrow money, it's very expensive. So it's very important to know that, and to be able to make wise decisions. So say, for example, car loans. Cars are more expensive, especially new cars are more expensive nowadays. And then you combine that with the higher interest rates, that could be a situation where you could have a higher car loan. And I read a stat where car loans delinquencies are on the rise. So it's very important to buy things that you can afford and not force it. Know what you can and what you can't afford during these time frames with these higher interest rates, and to make sure that you don't put yourself in a financial loophole, in a financial burden situation. So what I want you to take from this is just be cognizant of debt right now, because it is more costly to borrow money, and just be smart. It's a difference between good debt and it's a difference between bad debt. So don't put yourself in a situation to where you are, spending on high interest credit cards, and you are allowing that balance just to build up and to build up with these higher interest rates. Just don't put yourself in a predicament. Make sure that you're being smart with your credit card, and if you can, try to pay off the balance in full in order to be able to avoid any interest. So just wanted to kind of keep you guys abreast and kind of just let you know why this is very important to know about, so you can know how to move going forward. So I appreciate you guys. Definitely hit that like button, subscribe to the channel, and I'll talk to you guys soon. Peace.